Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We have back on our commodities guru and mentor, Rick Rule. Rick, thank you for coming back on the show.
Steve, it's always a pleasure. Thank you for having me back.
Yes, the pleasure's all on this side. I know you're traveling, so I appreciate you taking time out of your day. I'm got to say, I'm really excited. In 2 days, we're recording this on January 4th, and this Saturday, January 6th, we have your next boot camp coming up on developers. And as a Padawan of your uranium, silver, battery metals, and royalty and streaming boot camps, there is a direct correlation to the amount of hours and time we put into those and the numbers in our bank account. So thank you very much. And as I understand this next boot camp, we're going to be learning how to catch the sweet spot of the Lassonde Curve, right? The point where they're just about to start to go into production, and that's where the most money can be made. Are we right?
We're going to cover the whole Lassonde Curve, frankly. What happens is that there's a phenomenon in the market that Pierre Lassonde has described fairly well, where the news flow becomes technical and boring, and the stocks transition from retail holders who were more exploration oriented to institutional holders who want lower risk. And that interregnum period is generally a period where there's a malaise in the stock price, despite the fact that the companies are getting progressively de-risked. So in the developer bootcamp, we will describe companies as early as the preliminary economic assessment, but we'll spend much more time on companies that have or are about to deliver in sequence a pre-feasibility study, a feasibility study, successful financing and financing stack, all the way through not just economic completion, but rather the attainment of nameplate capacity. What we've noticed is that in the period between pre-feasibility study and nameplate completion, that it is very common to see 200 or 250% gains in the 3 to 3.5 year time frame, and see them at substantially less risk than in most other parts of the whole exploration and production cycle. We decided to air the development boot camp, both because it was one of the areas that our listeners asked us to talk about, but also because the current malaise in mining equities, but particularly gold equities, means that from the point of view of our own statistical analysis, these companies currently are anomalously cheap. Part of that, I think, can be explained by the failure of certain development stage companies in the Canadian Shield in Ontario and Quebec to complete their project on time, on budget, at nameplate capacity. Other parts of the world have been challenged too by inflation in the supply chain. But we think that the market reaction to those specific failures has been overdone. And we think that there's particular opportunity for reasonably low risk doubles or triples. I realize that many speculators parenthetically turn up their nose at double and triples. But if you combine the phrase double and triple with lower risk, I think that you end up with a very compelling exploration thesis. And I think we'll be able to deliver on that.
Yeah, we are looking forward to it. I'm going to share my screen here. Is this basically what you're talking about?
It is.
Trying to get it right in this region right here, right?
Yeah, and knowing me, Steve, we're going to be a little early.
Yeah.
That happens. I'm not a very good gauge of market sentiment, but I end up over time being a fairly good gauge of geology, engineering, and finance. Bernard Baruch once said the only guy who bought at an absolute bottom and sold at an absolute top was a liar. It didn't happen. So I need to be forthright with your audience and say, if you're hanging out with me, you're likely to be a little early.
Yeah, we were that way on gold for sure. Okay. Yeah, if can't wait for it. It's going to be this Saturday. There'll be a link down in the show notes. So we hope to see you there. All right. Now, your number one pick for 2023 turned out to be at least a triple, if not a home run. Your number one pick was uranium, and you based that on your logic was, as you explained many times, was the pace of Japanese restarts, and that happened because we had the answer. It was 2023. So we've been writing your coattails on that. Thank you very much for that. And Lost Cause says, he's quoting you here, and he says, the easy money has been made, but the real money is yet to come in uranium. And his question is the real money return higher than the easy money? And I'll tack on, what are the probabilities, do you think, of the real money?
That's a nuanced question, unfortunately. I know people want a simple answer, but there isn't one. I think that at some point in time, you're going to see a blow off, a speculative blow off in the uranium equities. And it will come at the riskiest end of the curve. In fact, it'll come out of the scams. I'm not going to play it because I'm not interested in monetizing fiction in scams. I don't think that the real money will be as generous as the big money has been made is. I don't think that you are going to see the length and breadth of the uranium juniors increase threefold or fourfold from here. I think there are some very high probability wins. I think, as an example, that the certainty that the market will have with regards to the cash flow from the restarted production that Cameco and Kazatomprom have, with the conversion of the uranium aftermarket to the term market rather than the spot market, means that those companies will do better than the market thinks. I think, too, that the companies that have what are clearly commercial deposits of a size and scope that'll matter in the uranium market will be taken over at prices which probably confuse speculators. I think even takeovers of companies as large as NextGen are going to occur, because I think that the upfront capital expense of building that, particularly if you build it in conjunction with fission, as you should, means that it will need to be done by a company at least the size of Cameco and perhaps by a company the size of BHP. I think that North American investors are likely to be surprised at the takeover premiums that occur in Namibia, Botswana, and Tanzania, and perhaps Niger. The Chinese are perfectly comfortable in those countries and perfectly capable of pronouncing them, which many North American speculators, to their detriment, are not. So I think, yes, the easy money has been made. Yes, the sure money is coming. And no, the sure money, with the exception of the sort of lunatic fringe, won't be as big as the easy money was.
Okay. Okay. So a lot of these doubles that we've enjoyed, like in Boss and other ones from your uranium boot camp, you don't see quite as much upside. Although there could be a blow off top. Trying to time that's probably going to be within a few days or something. That's not a game you're going to
Yeah,
play.
absolutely. In my life, Steve, at least for the last 35 years, uh, the easy money has been buying stuff that's hated, and just waiting, buying the best stuff that's hated, not the worst stuff that's hated, buying the best stuff that's hated, and waiting simply till it's no longer hated. And that's what we've done. And by the way, I have not sold all my Boss. I have not sold all of my Deep Yellow. I have sold enough that I recoup my capital. I paid my capital gains tax, and I sold a little more, just to reward myself for being right. Um, but I'm by no means all gone. I'm just playing on the house's money, which is a place I like to be.
Yeah, that's a fun place to be. Okay, well, piggybacking on that, what is your top pick for 2024 as far as a commodity? Is it gold?
I think it depends on who you are. Um, the only thing I see on the horizon, the only metal I see that's as unloved on the horizon as uranium was, is silver.
Hmm.
I suspect 2024 is too early for silver. I expect it'll move in 2025. I expect that gold has to move first. And for that reason, I'm going to tell people that for speculators, the gold equities are probably the place to be in 2024. And when I say the gold equities, I don't mean the lame, the halt, and the blind. I mean discovery stage companies that have a drill hole in, or for most speculators, development stage companies, which of course we'll cover in the boot camp. For those people who have access to good geological knowledge, I think there's going to be an awful lot of money made over the next 2 years, maybe not the next year, in the front end exploration, the riskiest part of the market at all, which is where I'm starting to shift more and more of my own personal funds. Note to viewers, don't try this at home without help. But I like for speculators the gold equities. For investors, my recommendation would be very different. And that's conventional oil and gas in North America. Names like Exxon, names like Chevron, or if you're willing to take a little more risk, the great big American natural gas names, Devon, Equitable. If you're willing to take a little more risk than that, the superb Canadian players, the ARCs, the Peytos, the Birchcliffs, the Tourmalines, the Freehold Royalties. For investors, not speculators, the place to be is the oil patch.
Okay. So if we're looking to collect dividends and invest our money, you see a lot of that in North American oil and gas plays, things like Devon, things like Exxon, things like Chevron, possibly Occidental, Glencore. And if we want to go a little bit more out on the risk curve and speculate a little bit, you're seeing that's kind of where your development boot camp comes in, and catching some of those gold ones. And possibly, you're starting to place your bets in silver, if I'm not mistaken, but you don't expect that to hit for probably after gold's run.
Yeah, it wouldn't surprise me if we replayed this interview this time next year and you say, yeah, you were early on silver. It went nowhere. And it wouldn't surprise me to see, in the comments, why would he recommend silver? It hasn't done anything. That's, of course, why I recommend it. I like to be out of the way of the masses in anticipation of their returning with some form of fervor.
Same reason you did the uranium boot camp a year and a half ago when it was flatlined and nobody cared. Okay.
Absolutely.
All right. Okay. That answers a lot of these questions as far as basically, so you've taken some of your uranium profits and now you're starting to look into what we just talked about. Okay, Scotty and Mike both want to know your thoughts on energy fuels. How do you feel about them?
I think Energy Fuels is going to do well. I don't own it because I like tier one deposits. I like great big deposits. Energy Fuels story is it's a well-run company with a plethora of smaller U.S. deposits and, importantly, permitted mill and tailings. I think that the company will do well because uranium is no longer hated, because the Biden administration has gone from wanting to put these guys in jail to wanting to give them subsidies. So I think that the political wind is in their sails. And I think that American investors, wrongly, will be ethnocentric, which is to say, I think American investors will think that American uranium is better than other uranium. Not true, but it doesn't matter. Markets in the near term move on opinion. I think Energy Fuels has some catching up to do with UEC as well. UEC has done a better job, I think, of cult building in terms of the American uranium narrative. And I think Energy Fuels probably needs to bridge that gap a little bit.
Okay. All right. So you think that they'll do well. They got the big thinkers are behind them now, whereas before they were obstacles. But
with the caveat that I don't know.
Yeah. They're smaller deposits, and you're like in the gold sector, you're more attracted to Barrick than other ones because they got tier ones. Okay. All right. Pocket Queens and Seapest are asking about Boss Energy after the 30% purchase of Alta Mesa from Encore.
Boss has been a wonderful performer for me. I like those guys, and I particularly like the fact that there is starting to be consolidation among the juniors. I sort of don't care who wins or who loses. But what I'd like to see is bigger entities which trade with more liquidity and have lower general and administrative expense relative to their assets under management. The boss guys are very, very, very high quality people. The only thing I have against the stock is that it's no longer hated, it's loved. There are a lot of people who require a stock to have gone up by 300% in price before they can understand its attributes. Mercifully for me, I'm not one.
Okay. How do you see the deal for Encore?
I think I would rather have seen it for 100% of Encore. I mean, I would rather have seen a complete corporate merger. I think that they have complementary skill sets. I think that Boss will definitely be able to aid them in the financing package and the construction package around that asset. As I say, I would rather the one set of overheads go away. While that makes sense to investors, it seldom makes sense to the management team whose salaries go away.
Okay. Okay. Do you own Encore or no?
I do not.
Okay. All right. That settles a lot of these questions. Okay, moving on to gold and silver. Simon's asking about Newmont. So maybe you can just hit on three of the big ones: Newmont, Barrick, and Agnico Eagle.
Newmont, I'm increasingly attracted to. I have objected to Newmont for years in that they have too many tier 2 deposits and not enough tier 1 deposits. The recent acquisition of Newcrest by Newmont has led to some weakness in the stock in Newmont. I always like things that get cheaper, but in particular, it has focused management's attention on selling tier 2 assets to lower the acquisition cost of Newcrest while continuing to develop their joint portfolio of tier 1 assets. So I think Newmont is moving determinedly in the right direction. I haven't added to my position in Newmont, but I've been pretty aggressively selling puts on Newmont, either pocketing the put income or having the stock being put to me cheaper than it already is. Barrick, I really, really like. Barrick is moving from strength to strength. I think that the Barrick stock likely suffers in the near term because I think that there's a widely publicized effort underway by Barrick to test the waters to take over First Quantum. If they succeed, I think the combined company 5 years from now will look very different than the two companies that you see today. I think that Mark Bristow has the skills to navigate the political challenges that First Quantum has seen in Panama. He's been able to do it in Africa. He's been able to do it in Pakistan. And I'm highly confident that he'll be able to do it in Panama. I think if he does it, that the market will be afraid of the acquisition and that some of the First Quantum shareholders who receive Barrick script will sell it. So I think, ironically, he'll be punished for doing the right thing if he's able to do the right thing. I, however, will be a buyer. Agnico Eagle is the only one of these which you could call untroubled and reasonably priced. The institutional investors worldwide have a very high regard for Agnico Eagle, both in terms of their capital employment, but also in terms of their mine building prowess. And they seem to go from strength to strength. I own it. I regard it as a high quality tier 1 company. I do know that they do have too many tier 2 assets. However, those assets seem to perform very well by most financial metrics.
Okay, so out of all those, it sounds like you like Barrick the most, and then Newmont and Agnico Eagle. On Barrick, them getting First Quantum, is that going to affect? Franco-Nevada should still get their royalty, right? Because it's tied to the deposit, not who owns it.
That's correct.
Okay, all right, cool.
Correct.
Cool. Okay, what Josh and Vincent want to know about GoGold? How's it looking with Mexico risk? What do you think of GoGold?
I like GoGold a lot. I think the stock has suffered because people are nervous about Mexico, and people have failed to anticipate, I think, that GoGold's exploration activities have become predictive. Which is to say that they announce an upcoming drill campaign with their intention, their exploration thesis stated up front, and it comes true. And my experience has been when you reach that point in exploration, you add ounces very quickly and at a very low cost. It's important to note that GoGold, you're not talking about a mine. You're talking about a developing mining camp. Part of the thing, ironically, that is keeping the stock back is they haven't delineated the camp entirely, and they haven't moved to that part of exploration where the investors can see near-term results come quickly. The consequence of what I think is a misperception by the market rather than by the company has led me to be very attracted to GoGold.
Okay. What ranking would you give them?
I have them as a 4.
Okay.
If they fall in price at all, I would love to give them a 3. I see them really as a sort of a silver company and drag. If you look at the numbers, an important part of the economic value of that deposit, depending on the silver price relative to the gold price, comes in silver.
Oh, okay. And I forgot to ask, what are your rankings on Barrick, Newmont, and Agnico Eagle?
Agnico Eagle, I have it as a 5, simply because the market has accorded them. I mean, I think it's a great company, but I think it's fairly priced. I have Newmont as a 5, which is up from a 6, because I think that the synergies around the Newcrest merger will be greater than people expect. And of course, the share price declined. I have Barrick as a 4, and if they're able to complete the First Quantum merger, and if the stock sells off, which I suspect that it might on that merger, I'll probably upgrade Barrick to a 3. Now,
Okay.
it's important that your listeners to know I'm prejudiced towards Barrick because my investing career with Mark Bristow goes back to Consmine, which was probably 35 or 40 years ago. I've been a beneficiary of Mark Bristow's prowess for 3 decades. He's one of those guys who has made me look smart as opposed to make me look stupid. And I appreciate
Okay, and a bunch of people asked about G Mining Ventures. They got scheduled production, I think, in the second half of 2024. Could this be a Lassonde Curve catch, you think, or?
that. I think G mining is probably a no-brainer.
Oh,
Uh, G is Gignac, a French Canadian family that have been mine builders for many years. I've known them for many years. I got to observe them up close and personal as a large shareholder of Lundin Mining in Ecuador. They specialize in open pit mines in high rainfall tropical terrains. What they're doing in their own company, G Mining, is building an open pit mine in a high rainfall tropical terrain
well, that's
uh,
perfect.
in Brazil. In other words, these are guys who are doing something that they set out to do. I think that they will be able to deliver on time, on budget, at nameplate capacity. And I think that that success will give them the ability to acquire other projects in a similar circumstance where the market has no faith in the incumbent managements to build a mine.
Okay. So
Uh,
that they're
I, I
doing this
wouldn't
in,
I
in,
wouldn't
in
be
a
buying
terrain that they've done before.
yeah, I wouldn't be buying G mining if you have a 3-month outlook. I'd be buying G mining if you are willing to hold it through nameplate capacity attainment, which is 18 to 24 months.
Okay. Okay. Kind of like the SilverCrest story a couple of years ago. Okay. Dr. Tech wants to know about BlackRock Silver.
I don't know enough about BlackRock to comment.
Okay. He also wants to know about Rio 2. They've recently, the government's kind of lifted their things on them, destroying chinchilla terrain or something. How do you feel about their structure for their pay for the employees, management, employee costs, share compensation, director fees? Have you had a chance to look through their
Yeah,
financials?
I felt reasonably good about their G&A relative to field expenditures when they were able to make field expenditures. In the last 2.5 years, because of the regulatory morass, they have elected to keep their management team and, in fact, their field staff intact, which meant that the G&A relative to field expenditures went up because the field expenditures went down. I'm a shareholder of that company. I have been a beneficiary of that management team for a very long time, and I continue to be attracted to the company. I was nervous at the level of general and administrative expenditure relative to field expenditure over the last 2.5 years, although I certainly understand the reason. It isn't that G&A has ballooned particularly. It's just if you're looking at percentages, you have to pay attention to both the numerator and the denominator.
Okay. What ranking would you give them now, or is that even impossible to do?
No, I have them as a 4.
Oh, okay.
Yeah,
Okay.
a speculative 4. Understand that different strokes for different folks. If investors look at a 4 in something like that company, they shouldn't assume that it has the same range of risks and reward associated with it that Barrick does.
Okay. Okay. And Sab wants to know about Hycroft mining.
I don't own Hycroft, although I'm a secured lender to Hycroft. I've been around that deposit for a very long time, and in fact had large shareholdings in several of the predecessor companies. It is a huge deposit, and it's one that's extremely sensitive to changes in the gold price. So if you were to see $2,500 gold this year, as an example, something that I don't consider unlikely, you would see that company do extremely well. That said, I like deposits that are in the best quartile worldwide in terms of return on capital employed at current prices, and deposits that will be in the lowest cost quartile worldwide at current prices. The consequence of that is that I'm not a Hycroft shareholder.
Okay.
It's all about leverage. There.
Okay. All right. And Zen wants to know Liberty Gold.
I don't follow it enough any longer, although with the reintroduction of Cal Everett to the management team, I'm going to get to know it again. I was always concerned about the discontinuous nature of their exploration and the relatively low grade exhibited by part of the ore body, but I've always been attracted to its size. And I've always been attracted to the fact that Cal Everett, who I have a very high regard for as an investor and geologist, was attracted to it in turn. I don't own it.
Okay. Wolfgang, our number one fan from Germany, says, see you guys in the boot camp. We will see you there, Wolfgang. He says, can you give an update? I think I've asked you this one before. Maybe I'm not pronouncing it right. Aurania Resources. It's Aurania.
Yes. I don't own Ariana any longer. It is a conceptual exploration play in Ecuador and Peru. It's run by a very successful guy, the guy who discovered Fruta del Norte. I haven't seen enough progress testing their concessions. Part of that has to do with the regulatory morass that is Peru and Ecuador. Part of it has to do with the extraordinarily remote terrain that they operate in. But I need to say that I have moved on from Ariana to questions that can be answered more quickly.
Okay. And a bunch of people, Tish, Phil, Justin, Manny, asked about Equinox. Their Greenstone project looks kind of promising. How do you feel about Equinox?
I love Equinox. The risk is I'm wrong. There's a few things that have weighed against Equinox. Looking back 3 years, I think it's fair to say that the company generated very good results at Mesquite by underinvesting in sustaining capital, which is to say that the operating results that they enjoyed were better than the operating results that they should have enjoyed. They got punished for that 2 years ago when the cost skyrocketed as a consequence of deferred expenditure. They were punished too because of ongoing sociological challenges with narcotraficantes in Western Mexico, something that they will revisit probably once every 5 years for the rest of the time that they operate there. It's endemic in the area, although they've made a lot of money in West Mexico in the last few years. But most of the market malaise had to do with the fact that they are making $1 billion expenditure in Northern Canada at Hard Rock. And the industry's experience in Northern Canada recently with regards to on-time, on-budget nameplate capacity has been lousy. So the market is anticipating that Ross Beaty's crew will fail. I believe they'll succeed. I believe in the second fiscal quarter of 2024 that they will announce on-time, on-budget completion. And I believe that 6 months after that, they will announce the attainment of nameplate capacity. If I'm right, at today's gold price, the stock will at least double. If the gold price goes up from there, it'll do better than that. I may be wrong.
Okay. All right. Doug wants to know about SilverCrest. So we've gone through that. They're into production. Are we basically waiting on $28, $30 silver, and then that one's really going to take off? How do you feel about SilverCrest?
No, I don't think so. I am beginning to buy a little SilverCrest because I think the surprises now are to the upside. Having said that, I had a pretty ugly surprise to the downside. You had on time, on budget completion, and then they went to do the reserve reconciliations with the data that they had gotten in mine development. And the reserve reconciliation was a great big fat miss, which means that my net present value calculation was a great big fat miss. I don't have to worry about on time, on budget completion anymore. What I need to worry about now is drilling within the production domains and recovering through the drill bit some of the ounces that I lost through reconciliation.
Okay. What number do you give them right now? A four?
I have them as a 5. I want to see the data once bit, twice shy.
Okay.
The decline in market capitalization has made up, for a lot of sin. And the fact that they're generating cash and paying down debt means that although the share price is staying the same, the enterprise value is falling fairly rapidly.
Yeah. Okay, and Sid and Learn both want to know about PanAmerican Silver. Um, any Escobal news that you've heard that we haven't?
I think Escobal resolves itself politically in 2024. I pay a lot of attention to that. Now, I am not a political analyst. Your listeners need to understand that. I am somebody who has developed reasonable contacts in Guatemala and works them very hard. I think, too, that Pan American was punished by myself, among others. I sold all my stock after the Yamana, or when the Yamana acquisition was announced. It was pretty obvious to me that the Pan American management team liked the Yamana assets better than they liked their own because they paid 100% of market capitalization to acquire new assets. They have done a reasonable job selling off assets that were redundant to reduce the capital costs associated with the acquisition. And I see them as fairly good allocators of capital, where they take existing cash and they use them to upgrade the status of formerly cash-starved operations, which I think categorizes the Yamana assets fairly well. If they get a breakthrough at Cascabel, or better yet, if they got a great breakthrough at Navidad, I think you see a lot of upside in the stock. I'm not trying to say that it necessarily has to happen, but I think you get it for free. And I like that.
You don't think it's priced into the stock?
I don't think it's priced in at all.
Okay. All right. Moving on to oil. Have you heard of Cross America Partners?
No, I have not.
Okay, I think they basically buy gas stations that have failed and turned them into, and they got amazing dividends. But looking at their dividend structure, I'm not sure if it's sustainable. What about EcoPetrol? Are those dividends sustainable? When I look at how much they're paying out in relation to what they're, I
I
don't see how.
I don't think that EcoPetrol is maintaining sufficient new project and sustaining capital investments, which is to say that I think, depending on the oil and gas prices that they enjoy, that the dividend may not be sustainable. If you're going to take that sort of political risk, I'd prefer to see people go in Petrobras, where their ability to maintain production, if they keep up the sustaining capital investments, is, I think, better. Better yet, risk to reward would be to eliminate lots and lots and lots of risk and go to a name like Exxon, admittedly with a much smaller dividend, but one that is absolutely, without a doubt, sustainable.
Yeah. Okay. All right. And Woodside Energy.
Woodside, I'm doing work on right as we speak. The merger of the BHP oil and gas assets with the Woodside assets uh, really delivers a super mid tier, but it's one that I don't know enough about yet to burden your listeners with my opinion on.
Okay. All right. And moving on to coal, um, uranium bull market is ironically asking about coal. Rick, for someone wanting exposure to Glencore's coal portfolio, is it wise to purchase Glencore shares now in anticipation of the spinoff, or do you think it'd be better to wait until after the coal assets are spun off in case some Glencore shareholders sell off during the spinoff for ESG reasons, or is now?
I don't have it. I don't have an answer to that. Usually, my own tendency has been, if I want an asset, to buy it. And I'm not smart enough to tell you what's going to happen. I think Glencore is reasonably cheap. And I think until the spinoff comes, that Glencore will profit mightily from the free cash flow of their coal operations. And I also believe that that management team has the ability to redeploy the assets intelligently. The risk that you have with Glencore is that there is a cloud around many of their asset acquisitions in a political sense, which is to say they've been convicted several times of bribery. And I suspect that they will face continued political challenges over, in particular, their African assets. So while I regard the stock as the management team, pardon me, as very astute commercially, and I think that the stock is cheap, and I think that their focus on coal and their plan to dividend off the coal company to shareholders is excellent. I would warn people who are concerned with political risk and volatility in the stock that this might not be the right name for them for psychological, if not financial reasons.
Okay. What number do you have them at right now?
I have Glencore as a 4 because it's cheap.
Okay. And Simon wants to know, oh, yes, that one. Peabody Energy.
Uh, I think you can't go wrong in the coal space for the next 5 years. I think the assets are okay, not great. I take that back. They have great assets. They have mediocre assets. It's a large company. It's a company that I used to object to from a balance sheet point of view, but the free cash flow that they've enjoyed from the coal business has taken care of that concern. So if one has the willingness to be, anti-Biden, anti-Trudeau, anti-Greta, you can almost pick a coal name.
Okay. All right. And a lot of them do nice dividends too. Okay. Moving on. Iron ore, Vale. Boxy wants to know.
Vale, you take political risk, and they have had a problem in the past with regards to capital allocation. There is also a cloud hanging over Vale from a tailings dam failure some years ago, which killed a couple hundred people, where the company is clearly culpable. If you can get past all that, which is a challenge, the company is reasonably cheap. I don't see with Simandou coming online in the next 5 years the type of up move that we've seen in the iron market. But I think the iron business continues to be a very good business. And I think one of the things that Vale benefits from is the increasing understanding among buyers that geopolitically diverse sources of supply are important. People don't want to rely, as an example, just on West African iron. The big iron users, be they Korean, Chinese, Japanese, want diversity of supply, which certainly Vale benefits from. I have Vale as a 5. I may, depending on the outcome of litigation in Brazil around the tailings dam, have to decrease. In other words, have to re-rank it as a 6 because I think they have real liability there.
Okay. Okay. All right. Moving on to copper. A bunch of people asked about Arizona Metals. Last time you saw the market cap is full. Have any updates on Arizona Metals?
Yeah, I like it. There's just so many things that I see in the copper business that attract me more. Unfortunately for me, Steve, the experience that I had with Ivanhoe and the experience I've had, frankly, with Filo and NGEX, I've become very picky in the copper space, and good doesn't work for me anymore. I want spectacular. I think people are going to make money on Arizona. I think that Americans are going to look at Arizona as a low risk permitting place. The experience that Rio and BHP have had with resolution, which is to say a 25-year permitting morass, and the problem that Rosemont has had, probably means that that faith in Arizona as a politically secure jurisdiction is misplaced. Now, my friend Robert Friedland, who is investing a lot of money right up the road, would disagree with that. I hope he's right. I hope I'm wrong. But I like size. I like grade. And I like things that other people don't like. The combination of all those is that my grandmother, I think in culinary terms, would have described Arizona as good, but not yummy.
Okay. How much stock do you put into the Fraser Institute and their ranking each? Uh,
None,
what's that?
none, none. It's a beauty contest.
Uh,
They don't rank, they don't do analytical work. It's not like they're a Moody's or a Standard and Poor's. What they do is they poll the industry. So you have a beauty contest. If you have ever read the book Extraordinary Popular Delusions and the Madness of Crowds, I think that you understand the Fraser Institute's methodology.
okay. Okay. All right. So you don't put a whole lot of stock into that.
I have a high regard for the Fraser Institute. I give them money because I like the work that they do on Canadian politics. But I don't care which girl at the Miss America contest the judges thinks is the prettiest. I care about the one that I think is the prettiest. And I think that the Fraser Institute survey is a beauty contest.
Okay. And wrapping up here, we had a few questions on tectonic metals.
I'm not a shareholder of Tectonic anymore. I like the people. I'm not a fan of sole risk exploration. And if I do sole risk exploration, I want a really definitive discovery hole. So while I like the terrain, I like the people. Well, I really like the people. Uh, I don't own it.
Okay. All right. Well, this was awesome. Thank you very much, Rick. If I got to give a shout out to your rural classroom, there'll be a link down in the show notes below that love the discussions there, and you can get on one-on-one like we are here and answer live questions. Keep up the good work. I love it. And we got your boot camp coming up in 2 days. Super excited about that. There'll be a link down in the show notes. Anything else you'd like to round out with?
Well, I want to tell people about the boot camps because people don't understand this. The financial risk is mine. There's going to be 8 hours of programming. As you know, Steve, you're not going to be able to soak it all in 8 hours. So you're going to have the ability to replay it for a whole year. Do it. You're going to have to play it 4 or 5 times to get your money's worth. But I make sure you get your money's worth. It's $99 if my memory serves me well to attend the boot camp. If for any reason you don't think you got your money's worth, email me and I will refund 100% of your tuition. Truth be told, 30 years of money back guarantees, I've had to refund about 0.1% of the tuitions I've charged. But that notwithstanding, I'm certain enough that we'll deliver value that the financial risk is mine. Gold-plated money back guarantee. The last commercial message I get is if you have questions that you'd like to ask me about your own stock portfolio, do it. Go to ruralalinvestmentmedia.com, list your stocks. I'll rank them 1 to 10, 1 being best, 10 being worst. I'll comment on individual issues if I think my comments might have any value whatsoever.
Awesome. Well, I look forward to it. I will see you in 2 days. And thank you to the listener for tuning in. Support the show, hit the like and subscribe, and we will talk to you next time.